Well, it's a very good welcome from me and from him or her, but depends who else is coming online for us today. Should be a big day here in Cheltenham, but it's not because the Gold Cup's, well, it's operating, the festival, but there's no crowds because of coronavirus. But this time last year it went ahead, much to people's annoyance, because it probably spread the disease more than it should have done, really. But enough of all that lot. So welcome, Paul Archer here. Let's talk to you for the next 20 or so minutes on all things mortgages. Remember, we're up to date for you. We're going to give you quality information moving forward on this YouTube live stream. So I want to talk about the budget. I mean, who else? Everyone's talking about the budget, of course, in the mortgage world. I want to give you something quite different, actually, than everybody else is probably giving you right now. But I had good news today. I want to share with you something. Why not? Because it's live. This is my invitation for my jab, and I'm going to have that. Definitely, everybody should have that, because it's, as the Queen said, you're doing other people a favour as well. So the Queenie told me that one, so that's all good news. And she's up to her eyes with problems at the moment for what's going on over in the States, but we won't talk about that. So I'm getting my jab next week, which will be great. But I haven't actually seen people for about a year, so you know, maybe we'd rather this goes to somebody that probably needs it more than I do. But there we are. Enough of that. Let's get on to our topics for you today. Yeah, hi, welcome. Let's take a look at the government's newfangled scheme, the mortgage guarantee scheme, which is going to revolutionise the way brokers work in the next year and a half, because it runs out at the end of December 22. So it's not here forever. And the whole point behind this, and let's put a little title up for you then, is the government have want to encourage lenders to lend 95% mortgages. That's the whole point behind it. So let's call this the government. So we're talking about the UK government. By the way, that is the UK government's mortgage, there you go, guarantee scheme. Guarantee scheme. For those of you who've been in the world of mortgages for long enough, like I have, you probably remember mortgage indemnity guarantees, which were all the rage, of course. They priced themselves out of the market, really, but they pretty much did what the government are doing. Now, the problem, of course, is that high loan-to-value lending is a key risk for lenders. Of course it is. You know, repossession occurs, property sells for less than it should do because it's a repo, mortgage balance goes up because of unpaid interest and charges. Invariably they sell and there's no equity to cover the mortgage, and the lender makes a loss. Don't like that. So they have, for the last few years, since the crash, pretty much kept high loan to value lending very low. Yeah, they'll do it with gimmicks like guarantors or sureties or something like that, or, you know, sole proprietor joint mortgage, that sort of thing, getting your mum and dad involved. But the pure first-time buyer who wants to stand on their own 2 feet and buy a house, their first place, if you like, on their own or with their partner, with a very small deposit, has not been around for a long time, until now, or until April, when this scheme starts. And what it basically allows the first-time buyer to do is to buy a property with a 5% deposit. That's what it is. So if we look at this visually, because I want to give you a bit more detail on this, really. If we look at this visually, so let me just sort of draw a picture here for you of my house. Here we go. Here's my house for you. It's a very tall house, because it is. There you go. There you go. There's my property, which we're going to be talking about as the live stream progresses. Now, this property, and I'm going to give you an example, is worth 200,000. So the valuation of this place is £200,000. Here you go. So it's a typical first-time buy property. Depends where you are in the UK, of course. But the whole point behind this is it allows you to borrow 190 grand or up to 190,000. So it lets you borrow at 95%. So put that in there for you. Now 95% happens to be £190,000. Right? So the first-time buyer, therefore, only needs to get hold of a 10 grand deposit. Only, it's a lot of money, don't get me wrong, but there's equity release on Granny's property if you want to look at that area for you, or there's obviously savings as well, which you can get hold of. But it's not impossible. My first place I bought back in the late 80s. I had a 5% deposit. I had to scratch around to find it, but I did. But I had to pay quite a hefty mortgage indemnity guarantee premium, because you don't need to worry about that because the government are paying this for you. So what the government are doing is they're going around to all the lenders and say, look, lender, do you want to be involved in this? And lenders are saying, yes, please. And the lender has to buy the scheme from the government. They have to pay a commercial charge to the government for the guarantee. Now, that commercial charge, nobody knows what the figure is yet, but it will be passed on to the borrower either in a higher interest rate or a higher arrangement fee of some description. So it will be passed on. And effectively, it allows the lender to lend up to 95%. But the government, you see, guarantee the loan above 80%. So if we put in 80% here, excuse me, here you go. The government guarantee above 80% for this example is 160. There you go. So anything above 160 to the maximum 95% is guaranteed by the government. So that in my book is £30,000. So the government are providing a 15% government guarantee. And what that does, of course, is protects the lender quite considerably. That's pretty much how the scheme works. Not a lot more to it than that. The lender is taking very little risk. There is a small extra risk, which I'll share with you in a second. So the lender effectively is lending up to 80% of the value of the property. So all the lender's in it for is 160. So the house price would have to come down quite a bit before it gets below 160 for the lender's going to make any loss. So they'll hopefully price this competitively, one would hope, to let the first time buyer buy it. So it's not going to be ridiculous costs. They do have to pay a bit more. There's obviously a commercial charge they pay to the government, and they'll pass that on as well. They do have to make a 5% contribution, effectively, 5% contribution of this. There you go. From the lender. So in a nutshell, what that means is if the lender had to claim on this, and I'll look at an example for you. Let's just say the lender repossesses this property down the line, and let's just say, let's get a different pen here, different figures. Let's just say the property was sold at say 180. In other words, the house price, although it was valued at 200, because it was forcefully sold at repossession, it was flogged for £180,000, and the mortgage was still 190, say it hadn't gone down, then the lender would make a loss, as you can appreciate, of 10,000, 10k. They would therefore, of course, claim this loss against the government's guarantee. There you go. They would claim the loss against the guarantee. Say, yeah, HMRC, Mr. Government, please give me that money, says the lender, and the lender will receive the cash. But they have to pay 5% of that. They have to put in 5% of that, which what's that equal? 500 quid, I think it is, yeah. I think it's £500, isn't it? Just double check that, yeah. They'd have to pay £500. So it's a bit like an excess on an insurance policy. In fact, mortgage indemnity guarantee policies used to have a 20% excess. So, you know, it's not a big deal, really. The lender will have to fork out a bit of money for that as well. And that's pretty much how it works. Other than that, it's a fairly straightforward event. You, as a broker, you'll need to explain this to your client. A little picture, don't harm, does it? It shows how it all works. If you make it sort of visual, and put in here that the government effectively are guaranteeing this. It's not a loan from the government. It's a loan from the building society or the bank or the lender. It's not a loan from the government like Help to Buy. This is a government guarantee. And they allow the lender to lend a much lower percentage effectively or take that risk. Hopefully, therefore, the percentage interest rates that have been charged are going to be quite low. I think competition will keep it low anyway. All the lenders are signing up for this. Crikey, they'd be fools not to, wouldn't they? And some of the specialised lenders are going to as well for, you know, sort of adverse credit cases, those sort of things as well. Here's a little bit more detail for you. It's available for loans between 91 and 95% loan to value. So it's above the 90% mark, really. What it will mean, as you can appreciate, is that the lenders will make all their loans look continuous and sort of very much the same. So their 90% lending will have the same sort of terms as their 95% lending. So they'll continue upwards as well. So you'll find a lot easier 90% lending, a lot lower rate 90% lending as well. But this is for 95% lending, or 91 to 95%. The lenders buy the guarantee from the government for a commercial charge. It is only for 7 years, but because the loans are only on repayment basis, Hopefully after 7 years, the mortgage debt has come down, being a repayment mortgage. So having a 7-year scheme is not a problem. So basically the guarantee only lasts 7 years. But a lot of first-time buyers tend to move on anyway, don't they, beyond that period. As I mentioned to you, it's repayment mortgages only, but most are done on repayment now anyway. First-time buyers don't do interest-only mortgages. It is for main residences only, which I think is a good thing. So landlords and second homers, you can't have one of these. So that's a good thing. You can't get 95% landlord mortgages anyway, buy-to-let doesn't work that way. It's a maximum property price of 600,000. So that's similar to the Help to Buy. And it stops in December 2022. So be prepared to have a sort of a cliff edge situation again in 2022. And other than that, that's about it, really. I think it's a damn good thing. I really do. It's what we were missing. The government are very clever here because they know the house prices are rising beautifully at the moment and won't go down. So therefore, they're not going to lose out, really, because people's house prices will go up and repossessions, hopefully if the economy really bounces back, repossessions are going to be low anyway. So the government are getting a huge amount of great publicity for not a lot of cost, actually. I think they're putting $4 billion aside for this. So it's not an awful lot of money at the end of the day. Very clever on the government's part, particularly so quickly. But they've modelled this on the 2013 mortgage indemnity or mortgage guarantee scheme that they used to have. So brokers, be prepared to get very busy if this is your marketplace. But be prepared for the online dudes to get this as well. This is not for complicated mortgages. Repayment mortgage, it's not complicated. First-time buyer, it's not complex. Hopefully the affordability will be quite easy. So the online dudes will get involved in this. You know, your Habitos and all those trusts and people like that will want to do this kind of lending and get some market share from this. So brokers, you have to work hard for this one. In fact, you're going to have to streamline your business, but that's a video that's coming up shortly next. Hope that's been useful. Bye. Ha! Did you like that one, did you? I hope you enjoyed that because there's a bit of detail there to help you understand how it works. Because that's what we gave you, didn't we? And of course, this kind of stuff and the stamp duty differences and the booming economy and all the furlough extensions, the grants, the money is going to boom the economy, and the average mortgage advisor, mortgage broker is going to get very, very busy. Lenders, remember, aren't really getting involved in advise risks at the moment. So most of the mortgages have been sold out there are done through brokers. So brokers are going to get really, really busy. So what I want to do now is do one final video for you, which I've entitled Busy, 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 because brokers are going to get very, very busy this year. So I've given this the title of Busy, Busy, Busy. So I couldn't really think of a better title, really, could you? Busy, Busy, Busy Brokers. Busy Brokers. There you go. You will get, if you think you've been busy in the last couple of months, think again, you're going to get really busy now because the mortgage market's going to take off. House purchase market, 95% lending, stamp duty's there until June, until September at a lower rate as well, the exemption from stamp duty, a booming economy. People want to have big gardens, they want to have spare rooms. So I can see things really, really bubbling along nicely. So 2021 is probably going to be your busiest year yet. And there's a good busy and there's bad busy, isn't there? Good busy is where you're productive and you're profitable and it's all working well for you. And you're doing a great job. Now, of course, bear in mind that there aren't enough mortgage advisors out there. Back before the crash, of course, in 2006, which was the last really busy period, take a look at the numbers in 2006. Now, at the time, there were about 20-odd thousand brokers, probably more at the time. Now the number of brokers has come right down. It went right down after the crash, and it's building up a little bit. It's nowhere near 20,000. So there's not, although you're busy there, what point I'm making is you're going to be just as busy this year, but there isn't as many of you to go around. So be prepared for a lot of business. Why, of course, stamp duty, land tax, government guarantee scheme, house prices rising, booming economy, people wanting to work from home now, having spare rooms. It's a perfect storm. Now, the answer, therefore, is to think about streamlining your business. Because you're going to have to do something about it. You're going to have to think about streamlining your business. I'm going to give you some ideas to do that. So streamline your business processes. Because if you're going to operate exactly the same way you do now, when you get really busy, indeed, you won't be able to cope with the business. So let's give you some ideas. First of all, try and deal with lenders that are using open banking. Now, you've probably heard the phrase. Open banking is where one computer talks to the bank account of the client. So deal with lenders that are dealing with open banking. so that when you submit an application, all the lender needs to do is to press a button. They then talk to the applicant's bank account via computer. They get all the information they need in seconds, and the whole mortgage goes ahead quickly. If you start providing with, pay slips and all sorts of tax returns, and it's just old-fashioned. So try and deal with an open banking concept where they can get all the information they want via computer APIs. It's the first one. Deal with lenders. Here we go. That have mastered virtual operations, in cloud operations, working from home operations. Some lenders have, some haven't. One of my best clients based in the west of London, they have really embraced virtual working from home. The MD there was quoted to say that he went into the office and there's 400 people normally there, but there's about 3 people working. And he was saying that they've had their best month ever and the most productive month, and all of their KPIs are on target, and everybody's working from home because they've got their laptops, they've got their cloud computing, they've got everything they need, underwriters. They don't need to be in an office. Now that may come and go as time goes on. We may go back to the office more, of course we might. But if you deal with lenders that operate quickly, then you will have a smooth transaction. Don't deal with the ones that are still struggling to work from home, as terrible as that sounds. The ones that delegate decisions, for example, do their underwriters have the ability to make decisions, or they have to go and talk to somebody else? These things all make a difference, Make sure that your own systems are slick. So do you have a fact-find system? Do you have a sourcing system? Do you have one system that does everything for you? Make sure they're slick and can be operated virtually from any place in the world. So you don't have to be in an office. So you can operate mortgages wherever you are. Make it all cloud-based, make it all online. Don't have any paper in the process as well. Get rid of the fax machine, by the way, as well. Streamline your sales process. Have a look at your sales process and get over calling it a sales process. I know you're an advisor, but you are still running a sales process. You're running a commercial enterprise. Have a look at your sales process, streamline it. Talk to me if you want to. Make it into smaller chunks, make it more regular, make it 20-minute meetings rather than big hour-long meetings. Slim it down where you can do, maximize the sales process, work out how the client wants to deal with you. Make sure it's virtual, of course. If you're dealing with clients virtually, then you definitely want to do that. In fact, that brings in the last point there. Make sure your tech is up to speed. Make sure your technology is working for you. Are you in the cloud 100%? And you should be. Get yourself into the cloud. Have everything you ever deal with in the cloud. You don't want localized computer hard drives anymore with data. It should all be in the cloud, so make sure that's the case as well. Do you have the right equipment? Do you have a sheet-fed scanner based at home? Do you have a rack of monitors? Do you have decent cameras? Do you have microphones when you talk to people? Do you have lighting? Do you have the up-to-date equipment? If not, spend on the right equipment. I mean, I've just forked out a couple £100 on a Stream Deck, which allows me to press buttons to move things quickly. It'll save me a few minutes, but it all adds up. Don't need to have people power when you can have computerized tech power as well. Do something like Calendly. I don't know if you've come across them. I mean, I use them. They're Calendly, I think they're called. Just Google it. There's an online calendar. This client phones up, wants to make an appointment. You can faff around trying to agree budget, agree diaries, but get them onto Calendly where they can access your diary automatically and fix an appointment, get a Zoom invitation. So suddenly it's all done. You don't need to be involved there. That's going to save you 5-10 minutes. Obviously, make sure you've got all the right Zoom software. You want Zoom and you probably want Teams. Are the two you want to go for, really. You might want to have WhatsApp, but that tends to be a bit faffy with phones and stuff like that. Teams is great for the corporate, so when you're talking to your lenders, get into Teams. They're all in Teams. You see, they all like their security, which is fine. Make sure you've got a decent Zoom account so you can invite your customers in on Zoom. Zoom's the best one, really. WhatsApp and some of the other ones you can go for as well, but you need that to do a decent enough job as well. Last thing for you. And I'll draw a little picture of my cloud. See if you can guess what this picture is. Here we go. Let's see if you can guess what this is. Do you get all this? What's this then? This is a parachutist, although he's been strangled by, look a bit here. It's a parachutist. I'm talking about power planners. If you're on your own, make sure you get some help. You can outsource help. You can get power planners. You can get admin support. You can outsource this if you want to, use it virtually. You might even consider getting an apprentice. Now, the government are giving you like £3,000 or something to take on an apprentice. They're paying salary and all sorts of things. So look into that as well. It's worth looking at. You have to provide time and mentoring and help, but you're actually helping somebody new get into the business. So if you feel the time is right, do that now. You will need to invest in your time, so you might not be able to find that, but you definitely do need to get extra help into your business because you are going to get really, really busy. So that's it. Busy, busy, busy. Brokers, make sure you get your systems sorted, really streamline your business. Shave off an hour a day or get yourself an hour back a day, whatever it is, by buying some tech, buying some equipment, streamlining your sales process. Have a think about it. Talk to me if you want to. I'm happy to consult with you, coach with you about how you can do that, because I work with a lot of brokers, and I've worked with a lot of virtual brokers that have really been able to get more mortgages done per day now than they ever used to, because you'll need to, because you're going to get really busy. And good luck to you too on that one. Bye. Did you like that one, did you? Okay, so yeah, good topics, really. Good topics. The budget was very interesting. I'm sure you've looked into it. I'm sure you've looked into some detail. Again, you can Google it. It's not a difficult thing to do, is it? The other one for brokers that might help you is the investment in businesses, because the government are giving you 130% corporation tax relief on plant and equipment investing into your business. So if you're going to do that, make sure you claim back your corporation tax. That's, of course, if you're a limited company. So that's another advantage to you as well in helping you along the way. Other than that, the rest of the budget's pretty straightforward. The government are claiming back more tax, but in sort of 2023 onwards, they're going to increase corporation tax for big firms, not so much for small firms. They're freezing everything else. So they call this fiscal drag, don't they? We've always got a name for something, haven't we? Where although the headline rate isn't tax going up, the fact is more and more people become higher rate taxpayers. You'll find that actually in about 5 years' time, in the mid-20s, that more and more people will be higher rate taxpayers who shouldn't be, really, in the great scheme of things. But they will, and therefore the government will get extra tax that way. So they've kind of like evolved the basic rate tax to become high rate tax. But all the other things are frozen: IHT, pensions, limits, ISAs, capital gains exemptions, dividends, taxation. Nothing really has changed. So it's great if you're doing your CMAP examinations, because nothing's changing, is it? And that's how the budget's happened. Let's look forward to a good year. Hope you enjoy yourselves. Remember, we've got another boot camp starting in April, early April. You can get onto that now. Start early if you want to. I'm around to help in any way I can. So paul@paularch.com if you want to email me. But just leave a message down here on YouTube. Make sure you get your pals to subscribe as well. Remember, we keep you up to date with quality information on a weekly basis as we move forward, because we can now, because we're getting closer to you guys, because we're just using tech to do this, which is what you should do now, isn't it, moving forward? Hey, I've got my jab, got that booked in for next week. So next week when I speak to you, I might well be immunized. Really looking forward to that. Should be a good thing. See you next week. Bye.